Takeshi. I work in the bank as a financial advisor, and this is my colleague, also a financial advisor. So tell me about yourself.
Hi, my name is Jared. Yes, he said I'm his colleague, and also we both work in the bank. So we are both financial advisors. I've been really interested in personal finance, specifically when I was a young kid. So that made me want to work in the bank, and that's where I am today.
Oh wow, yeah, I just knew that.
Yeah, you just knew that. That's why this is casual, thanks.
Okay, so well, I believe you have tons of knowledge about investment. So before we go more deeper about investment, what is investment?
Investment. A lot of people use the word investment wrongly. For example, I would like to invest in a Nintendo DS, or I would like to invest in a Nintendo Switch or PS4. That just means that they want to put money in something which doesn't do anything. An investment is something which you put your own money in or your own effort in, and it produces money for you. As long as you're earning money from it, it's an investment.
Oh, that's a very good definition for investment.
Yeah.
So you work as a financial advisor. You talk about life insurance. You talk about unit trust, credit card, personal loan.
Yeah.
So what is your advice if I want to invest at a younger age, let's say at 18 years old?
So if you're 18 years old and you want to invest, the most important thing you need to know is you need to ask yourself why. Why do I want to invest? So if you're 18 years old and I want to ask you, so Mr. Takeshi, why do you want to invest?
To make more money.
To make more money. Yeah. So as long as you break down the concept, I want to make more money. Why do I want to make more money? You break it down to the total root of the situation, and you ask yourself, okay, I want to make more money. Why? I want to provide a future for my parents, which is a nice future, a comfortable future where we all have money to spend. Why do I want to do it? Oh, because when I was young, my parents don't have enough money to put me through a good education. They don't have enough money to give everything because they are limited. So I want to do that for my parents. I want to do that for my family. Then you break it down like why? Because I want a world where everyone can spend money without looking at the amount of money they have in their pocket. So once you break it down, your why I want to make more money, becomes strong. Once it's strong, you have the ambition to earn money.
That's very interesting.
Yeah.
That's very interesting. So I was informed by you yourself that you are educated in entrepreneurship. You took your bachelor degree.
Yeah, I took my bachelor's degree in entrepreneurship.
Okay. So I know that you are being designed, educated as an entrepreneurship where you can find your own revenue, you can find your source of income without the efforts of working for a company, right? I mean, working in a company is essential,
Yeah.
but you want to create a passive income, right? Especially passive income. So tell me more about passive income.
Passive income, or where do I start? Alright, imagine the saying, money doesn't grow on trees. So that saying is very popular. I think that saying is wrong, because there's something called passive income. Passive income, think of it as if you're doing nothing, but every month, money flows into your bank account. You don't have to do a single thing. That is the definition of passive income. That is the pure definition of it. Don't do a single thing, but money flows into your pocket.
That's a good idea.
The simplest way to explain to someone who you could be 18 years old, you could be 16, you could just started your very first job. So you want to know what passive income means? It's the best way to explain it. Yeah.
So how do you correlate with entrepreneurship mindset? I mean, entrepreneurship is about solving problems on the society, right?
Yeah.
And you also talk about passive income. So how do you synthesize the two ideas of entrepreneurship and passive income?
Yeah, because it sounds very different. Because passive income is you don't do a single thing and money flows in.
Right.
Entrepreneurship is you have to work very hard. You have to start your own company. You have to hire the right people. Right. They're like very different things. But as your company grows, so when it's a small company, everything is decentralized. You have to make the decisions yourself. Everybody can do their own, everyone have their own specialities, and every time you meet together to brainstorm and create the company. But as your company becomes bigger, you don't have to do that anymore. You can leave it to your directors, you can leave it to your assistants
Mhm.
to help you. And a lot of things you don't have to do already. You just have to make the biggest decisions, like what should our company invest in? Should we take our company public through an IPO, initial public offering?
Right.
Should we do, like all the big decisions, all the small decisions you don't have to do anymore. So most of the time, you wake up in the morning, you grab your coffee, and you look at your stock market, you look at your shares or your company, and then you relax, and you wait for people to ask you questions and you answer them. It's very close to passive
Well,
income.
that's very interesting. So your perspective is, the other option is to create your own company, set up your own company from scratch, from a very small company, and shift to a very big company, which eventually you just have to smoke your cigar and watch a movie.
Yeah. How do you know if your company is a big company? You have minimum 500 employees in your company. 500 is a very big number. That just means that you're a big company. You're able to pay salary for these 500 employees every month without delay, and you'll be able to provide for their benefits as well as their welfare. And you can do that without stressing about it. Yes, you're successful already.
Okay, that's one way of passive income. What about the other way of buying a real estate?
Oh.
Even me myself, I bought a house, I rent it out, part of the investment. But I have to make sure that the rental income is more than the installment that I pay to the bank.
Yes.
So how do you create your first house? I mean, your first passive income through real estate?
Yeah, my best way of defining whether a real estate or a house is a good investment, or how can I build a passive income from it, is to know whether it's an asset or a liability. An asset is something which puts money into your pocket. An asset could be Pokemon cards. An asset could be this phone you bought and you sold it again for a higher price. Anything you do which puts money into your pocket is an asset. But what takes money out from your pocket is a liability. A lot of people, when they come to the bank, they think that their house is an asset, but actually they're paying for their installment and they're not earning money from it. Well, at least for not now. They earn it maybe in 30 years when they sell the house, eventually. But as of now, every month their money is going out from their pocket. It's a liability. So if you want to start on a real estate, if you want to start buying your first house, you have to ask yourself, is my house an asset or liability? If you can answer that, you're on the right track.
Oh, I see. I mean, you talked a lot about Robert Kiyosaki, right?
Yeah.
And the books about passive income and trying to borrow money from the bank and then try to leverage the money from the bank to build your own assets, right? That's part of the entrepreneurship mindset as well, isn't it?
Yes, the entrepreneurship mindset is a mindset where anything is possible as long as you ask how. A lot of people will say, I can't afford this. Like look at this Starbucks coffee. I can't afford this. An entrepreneur will say, how can I afford this? How? What can I do so I can afford this cup of coffee? So as long as you think how do I do this? How can I do that? Suddenly, you open up a world of possibilities. And that's very important if you are being an entrepreneur. Especially when you talk about Robert Kiyosaki and also leveraging money from the bank. Well, Robert Kiyosaki, he likes to talk about using other people's money and other people's time to help you. Well, it's a win-win. For example, you're a big business owner.
Okay.
You leverage other people's labor, other people's time.
Okay.
Other people work for you. 500 people working for you day and night. And everybody earns. They earn their salary every month. And you earn your profits when the share goes up for your company. But you're not working very hard. You're not tired every day. You wake up, you have enough energy. And everyone else is working for you because they want to get paid money. At the same time, you help them out with welfare, with medical benefits, you know. Same goes for, that's the entrepreneurship mindset. How can I use other people's time or other people's money to make me money? Other people's money, the bank. The money in the bank doesn't actually belong to the bank. It belongs to everyone who saved their money in the bank. Right? But the bank uses your money and they try to make money elsewhere. And whatever they earn, they give you as interest. So putting your money in the bank is a way of, capitalizing on that. But what if you can think bigger? What if you can borrow the bank's money to do something with it? Now that's something you have to think about for yourself.
That's a very good idea. Okay, that's one part about real estate investment through the passive income. What about passive income through investment like unit trust, structured product? I mean, is that possible?
Yeah, passive income through unit trust. I haven't figured out a way to think of how I can earn passive income through unit trust yet. But it's possible through stocks because stocks gives you a dividend.
Oh, I see.
It's not every month. It's not like rent. Like if I buy a house and I rent out for someone, I can charge them 1,000 a month, for example, and they pay me 1,000, and I do nothing. Sometimes I fix the lights. Sometimes, most of the time I do nothing, and I earn 1,000. But for dividends, they pay once a year. So you need to think, okay, only once a year I'll get this paycheck, for example. But I still don't have to do anything. I just have to put my capital. There are two ways to invest, right? Capital or labor. Labor is you work hard, you use your energy, you use your time, you use your skills, you use your knowledge. Capital, you use money. Simple, just money.
Isn't that part of the 4 quadrants of the Robert Kiyosaki drew?
I don't know. That was
On the book.
the 4 quadrants from Robert Kiyosaki talks about the 4 ways people earn money.
I see.
Yeah, really quickly, you can earn money as an employee working in a company. You can earn your money as a self-employed person. It means I start a salon, I start a firm as a lawyer.
Small business.
Yeah, small business. S stands for small business, self-employed, selfish. Why selfish? Because you have to work very hard. You have to think about yourself. You have to ask yourself, how can I be specialized? S stands for specialized.
Okay.
B stands for big businesses. Businesses with over 500. Businesses which can scale to the point where I don't have to run my business. I just find someone to run the business for me. I earn a bit, he earn a bit. And then I, the last one, is investor. So where you just use your money to earn more money, and you don't have to worry about.
Okay, that's brilliant. I mean, we keep arguing about the 4 quadrant.
Yeah.
We keep arguing about where we can be all of the 4 quadrants, where it's gonna be another quadrant in the middle. Like you can be a self-employed, you can become employed of the company. For example, a board of directors.
Yeah.
You can set up your own small companies, let's say restaurants. You can set up your own big company like MNC, probably can be anything. It's a big business. And the other one is investors. Like every businessman, they do invest, not just through the bank, through the investment bank, or through the real estate. Right? So I believe everyone can become the quadrant in the middle.
Yeah, that's what we've been. Before this, we had a very long conversation about the quadrants. I believe that everyone is stuck to one quadrant, whereas Takashi, my colleague, believes that actually you're flexible. You can change. You can move like water. You can actually have aspects in every quadrant and make it your own. Like in the middle, right?
Yeah.
Yeah.
But you say otherwise.
Yeah, I say otherwise. I personally believe my opinion can change. Man, I have more to discover. I have lots of things to learn. But I personally discovered that a lot of people, the way they speak reveals which quadrant they are. So like, for example, if you tell your friend or your family, say, man, the medical benefits went down for my company. I want to work somewhere where I can get, a stable job, a secure, they're an employee, confirm 100% employee. If you hear someone saying that, okay, my time is very precious. I earn about $10 an hour. So the service you're giving me better be worth $10 an hour. Whatever you want me to do, you better pay me more because I can earn so much more. I can work so much harder. I'm better than everyone else. Self-employed, specialized. Big businesses, normally they'll talk about, okay, I'm looking for 4 managers to run my company. I can't find it. Okay, I have 200,000 in my bank account. That is enough to pay the salary for my 500 employees for 2 months. 2 months, I don't have enough cash with me. I want to grow my company. Big business.
Right.
Investors will talk about return on investment. Oh, my ROI is going down, return on investment. My return on asset is very bad. They use terms like that. They use PE ratio, they use all kinds of calculation.
Right.
Because they're calculating how much their money can work for them.
That's true.
All different ways of saying.
Right.
But Takashi would propose that maybe there is a way to incorporate everything into one. And you don't have to be stuck in one quadrant. So yeah.
I mean, it's kind of true. And then, okay. And the other thing is that you kid talks about you don't have to be specialized in one area. As you are a financial advisor,
Yeah.
you know a lot about personal finance, right? But you can widen your knowledge into HR or perhaps into the IT, information technology. I mean, you can learn a little bit from different industries. So that's what makes a perfect leader. Do you agree?
Well, it depends on the type of leader. There are many types of leadership,
Okay,
right?
okay.
Yeah. So there is one type of leadership where you have to really know everything. Like you need to be the smartest person in the entire industry, for example, to run your team. Not say business stuff. Let's just say if you're just a leader, you run a small team.
Right.
You need to be the smartest guy. There is also another type of leadership where you don't have to be the smartest guy, and you don't have to know anything, but you need to know who to find, if, so that they know. Example, I have no idea about IT, but I have 2 contacts in my list that knows about IT. I don't know a single thing about law, but I know 3 people that I can ask about law advice. I just have to, the only thing I have to do is think of an idea. For example, currently it is very hard for you to buy a house and rent it out and earn money. Right. Now the idea is, what if I do process A, for example? Then I need to ask my lawyer about it. Is this legal? Can I do this? Can I skip a few processes? I have to ask my accountant, can I skip tax if I do this? Legally, for example. Or what if I try process B? So what happens is that you free up your brain space to think of ideas. That means you don't have to really think about, okay, I have to memorize this formula to calculate my return. I have to memorize this law so I don't get caught. That's another type of leadership.
Isn't that the one of the leadership style from the Ford?
Henry Ford.
Yeah.
Yeah, he was very
What
angry.
woman told me that?
He was very angry because a lot of people asked him specialized questions, and he was so angry. He's like, I can answer any question. I just have to dial up the people I know. Then they say that, oh, that means you're cheating. He says, I'm not cheating. I'm doing something which other people are not doing. They are just focused on their education. They're focused on what they've studied and what they know. I'm focusing on thinking, and that's something which not many people do. They don't really think of ideas. They don't really think of what they should do with what they have. They just focus on what they know, which is different. Like thinking requires applying what you know, right? But what you know, it's easy. I mean, you just go and get an education. You can memorize. You can recite. You're just memorizing it. It's not really applying it. The applying part is what makes a good leader good. So you don't really have to know everything, but you just have to find the people you know and help apply what they know.
That's very interesting. That's a very good idea.
Yeah.
I never thought of that. And we talked about the unit trust.
Yeah, unit trust.
And I agree about dollar cost averaging, and you agree about a lump sum investment. So why do you agree that lump sum investment is better than dollar cost averaging?
Okay, so not just unit trust, when it comes to investing in general, a lot of YouTubers, they also, financial advisors, YouTubers, people which I've checked up on social media, they recommended dollar cost averaging. And they say that it's very good because it is a consistent process. You just don't think about it too much. Just put in a sum of money which is not your expendable income. It's not the income you have to use to pay your rent or pay your bills. It's extra money. Put aside a bit every month, consistently, and let it grow like a rolling stone. And Takeshi thinks that it's really good. The dollar cost averaging or DCA is amazing. I believe lump sum investing is better, where you just put a big amount of money into somewhere and forget about it for 30 years, for example.
I mean, it's good if you do that. I mean, it's good if you do that for a very passive investment, like a very conservative. Yeah, like one of them is a fixed deposit or even a bond, money market. It's very low risk. So you just have to put your money, you don't care for the next 10, 20 years, right?
Yeah, I mean it's a no-brainer to have a lump sum of money to invest in a safe fund like money market or anything which gives you like fixed deposit, for example. But what if you're starting out new? You're new to investing and you don't have a lot of money. You don't have 300,000, for example. You only have maybe 1,000 in your bank account and you're asking, should I lump sum or should I dollar cost averaging? Should I do DCA or should I lump sum? I think lump sum is okay also. It's not a bad way to start. Imagine putting 1,000 there, extra money, mind you, extra money of 1,000 into a lump sum investment, and wait 1 year, see what happens. Rather than putting 100 every month for 10 months and see what happens.
But dollar cost averaging is where you buy low and you sell high. Let's say if you invest on January, and let's say the price was 1 ringgit. So let's say in February it went down to 50 cents.
50 cents,
Then you buy at 50 cents, right?
Yeah.
And then you try to go dollar cost averaging through the 1 ringgit minus 50 cents and you divide by 2 months.
Yeah.
So that's where you get the average price.
Yeah,
So
75 cents.
so you can buy at a lower price. Now, once it went up to 1 ringgit back to the original price, you get 25 cents.
Yes.
25%.
So dollar cost averaging is amazing when the markets are going down.
Right.
Because you can take advantage of it.
That's true.
I don't like it because if the markets keep going up, right, dollar cost averaging is very bad. It's like you're wasting opportunity. Lump sum investment, if the market is going up, is amazing. Now we live in a world where it's up and down.
Right.
So we're not sure. I still like lump sum investment because when I put it in, I know that I can handle the risk. You need to be able to manage your emotions and your risk if you want to do lump sum investment, because it's not for the faint of heart. It's gonna make you not be able to sleep if you cannot handle the emotional stress. Dollar cost averaging, on the other hand, is very, very easy. It's very safe. When you do it, you don't feel the pain. When it's going down, it's just 100 of mine. It's just 10% of my money, for example. But if you put a lump sum investment of 1,000 and it goes down 10%, that's 100 ringgit, for example. Yeah, that is the contrast.
I mean, you read a lot of books than me. So what about the idea of buying a property every single year? I mean, so the idea was that you buy a single house for part of the investment, and you rent it out. Let's say your installment is 1,000 ringgit and you rent it out for 1,200 ringgit. So you got 200 ringgit for your passive income. It's still going to be your gross income. You still have to minus the maintenance fee, the property tax, all that kind of expenses. So let's say if the net income is only 100 ringgit. So what I've been thinking was that for the first year, I'm going to use the tenancy agreement as part of your income. So I'm going to show it to the bank that I don't have any commitment through my tenancy agreement. So I buy another house with the tenancy agreement. With my active income, which is the one that I work with the company, so I have two income, right? So in other words, I don't have to pay for the installment. It's like I don't have any commitment. So I buy another house, and I will do the same thing. I will try to rent it out over the installment rate, still got some income, and I use my tenancy agreement for my first house and my second house to buy my third house.
As long as you are super sure that your investment is an asset, not a liability. Remember, an asset is something which puts money in your pocket. A liability takes money out of your pocket. So for your case, money, which is $100, goes into your pocket every month, right? Since you're not losing money from this transaction, you can literally go infinite.
Yeah, exactly.
Yes, as long as you have enough money for the down payment.
So from the asset that you acquire, the property will appreciate over time as well. Let's say 5 to 10 years. So it's also become part of your retirement goal, because it has been proven through the statistic from our ETF or KWSP stated that even $500,000 it doesn't sufficient for the next 10 years.
Yes, that statement, $500,000 will not sustain you for your
For the next
retirement.
10 years, yes.
For the retirement.
So what I've been thinking was that buying a property, part of the investment, you don't live there, you rent it out, and then you just let it appreciate it over time. So let's say if you live until 75 years, you're going to retire at 60. So right now you are 26. You still have plenty time, 20 over years to live until 55 or 60, and then retire, probably want to sell part of the house to get some of the money to to invest, let's say to fix deposit, you still get some passive income, right?
Yeah, but the house is better, don't you think?
Yeah.
Imagine if you're right now, so let's just, okay, give me a timeline. When do you start investing? And then we count until you retire, for example.
Well, I first bought my house at 24 years old.
Okay, 24 years old, right?
Yeah.
Let's just say you retire at 60.
Yeah, 60.
Okay, let's just say you retire at 60. So you are 24 years old. Think that, okay, I'm 24 years old. I bought a house, and this house earns me 100 ringgit a month.
Yes.
$100 a month. Ringgit, we're in Malaysia. So if this house can earn you 100 ringgit a month, and every year you buy a house, so let's do the math.
1,200 a year.
You earn 1,200 a year, but let's do it month, so it's simple for you guys. 60 minus 24. You have 36 years ahead, right?
Okay.
So that will mean 36 extra houses if every year you get
Yeah.
a house. So if you earn 100 a month from your houses, you earn 3,600 every month. Right? If every house earns you 100 ringgit, if every house earns you 100 ringgit, at the age of 60, you have a passive income of 3,600. To me, that's comfortable enough to live on for your retirement. You don't even have to sell the house to put in fixed deposit. You have 3,600. That is good because the ultimate goal of everyone, investors in general, is that their passive income, the money they earn without doing anything, is more than their commitments every month. As long as it's more than your commitments, you're free. You can do anything. You don't have to work. You can quit your job. Yeah. But you're retired, so definitely you quit your job.
Well, it still depends on your lifestyle though. I mean, today's one value for the next 30 years is if we consider the inflation rate, it's going to be more than that.
That's true. That's
Yeah.
true because inflation is really painful, right?
Yeah.
Like it's like ghost. It's like a ghost, but you cannot see it, but it's there.
Yeah, so what I've been thinking is that I can't keep the property for the next 36 years. All the property has the peak time, like the peak period where that's the highest value that you can
That's
go.
true.
Then you have to sell the properties.
But your rent, you can raise your rent.
And you can, but there is still maximum value for the market value on that particular properties. Let's say if there is one area, the maximum you can go is 1,500 for the next 10 years. That's it. Because there is no development in that area, there's nothing.
Okay. Here's the beauty about inflation. Inflation only eats at you if you save money. If you put money in a bank and you don't do anything with the money, inflation will eat you up because every year your money is worth less.
Unless if you put the money into your bank account and you do nothing about it,
Yeah,
then
your 1,000 ringgit will be worth 50 ringgit in 60 years if you don't do anything with your money. But passive income is different because the money moves.
right,
Every month you get 3,600, for example. You need the money to pay off your rent, the bills, or whatever.
right,
And normally bills don't go up in price; they stay the same.
okay,
Just that the money, the purchasing power you have is going down.
okay,
So the beauty of passive income is that you're not really affected by inflation. For example, you pay your bills of 500 ringgit, $500 every month. And you're 60, and when you're 60 years old, your bills are gonna be 500 also. It's not gonna go up unless you ask for a higher internet coverage, for example.
okay.
So your 3,600 is enough to sustain you for the lifestyle you have right now. But in the future, if your lifestyle changes and your commitments grow bigger, then you just have to improve your passive income. Why get one house a year? Why not get two? At that point, you have enough money to get two, for example.
But most of the investors, they invest into properties. They don't think so much about the passive income that they get every single month. But all they hope is the capital appreciation. So let's say if they buy a house, they just use the rental income to pay off the installment. And after 5 years of doing that, keep doing the same thing perpetually for the next 5 years. Then they will sell their house. Let's say if they get another 30,000 capital appreciation, so they will divide by 5 years. So that's the reason.
Now, those investors to me are not truly investors, they're traders. They buy and they sell, they buy and they sell. They run their property business like they run a market. It's not bad. It is a strategy. It's not a strategy I like. Imagine playing Monopoly. You played Monopoly before, right? So there is a saying which says that a rolling stone enters no moss. That's very true when it comes to investing for passive income. So when it comes to monopoly, you want to buy all the houses and you don't want to sell them. You want to buy all of them, improve them into a hotel, and you want to just charge rent every month. You don't want to sell them. Even though you can sell them for a lot of money, the peak price may go up or down, but you don't want to sell them. Because the winner is the person who has the most houses. Eventually, you want to own as many houses as possible in monopoly. Okay, let's go back to real life. So in real life, yes, the advantage is better if you sell the house at peak price. But what if, I don't know, with your creativity, with your knowledge, instead of selling the house, you use the house as leverage to finance 10 more houses.
Okay.
That's better than selling the house. You still own the house, you just owe money to the bank.
Right.
Yeah. But you still keep the house. It's under your name.
Right.
So under your portfolio, Takashi for example, you still own the house. But because of that house, it bought you 10 more houses. So what if you owe the bank a bit of money? As long as your passive income can cover your monthly commitment to the bank, you don't owe them. I mean, you're free.
It's very interesting. That's how I see it. I mean, borrow money from the bank to make more money. I think it's a very good investing strategy as well. So what is your ideal passive income? What is your ideal business strategy to create your own passive income?
So for that one, honestly, I'm still figuring that out. I think for now, the best way is real estate. Because real estate gives you monthly passive income. I can't for the life of me find an investment which gives me a monthly passive income. Even stocks give you once a year, twice a year, twice a year. Sometimes if they're lucky, they give you 4 times a year. That's not 12 times, that's just 4 times a year. I want my paycheck every month. So the best way is renting. Unless I can find another way. I haven't figured it out.
Very interesting. So interesting.
Yeah.
I think that's all. I mean, we talked a lot about investment,
Yeah, we
we talked
covered
about
a lot.
leadership, we covered on the
Yeah.
property as well.
Yeah, that's a lot of information for you guys out there to process also.
And so that's all. Thank you very much.
Thank you.
That's all, bro. Yeah.